Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And as always, we start with some EVE news, and of course we got a very interesting announcement for the Viridian expansion, which is that Lancer Dreadnoughts, the first Tech 2 capital ships, are coming to the game with this expansion. And as far as I can tell, they're a pretty interesting choice and definitely an EVE choice in my opinion. It's not just here's a new ship, it's completely overpowered, everyone rush for it. It definitely has drawbacks because apparently its new lance weapon will have negative effects for the ships around it, so you'll have to use it very tactically, position it in certain places where it doesn't hurt its allies too much. And then it has a lance that is basically like Doomsday, a shorter, smaller Doomsday that does a lot of damage to capital ships, but also keeps them in place, has an impact on tethering. So I think that one is still a little bit up in the air. How will it interact with tethering as well? Does it break a tether or does it just prevent you from tethering? Not sure about that one at 100%. And then of course also it like drains your cap and it does a number on your remote wrapping that you can receive. So very interesting, very specific, definitely an anti-capital weapon as well. So it's gonna be interesting to see how things develop for that, but it is not like you just buy this and all of a sudden you get the best ship in EVE. Very far from that. It's a ship that has a very specific role, very tactical, and that will find most of its uses in large alliances, in very big nullsec battles, and in lowsec as well. Probably people will find ways to use this and you could say abuse this, but this is EVE, there's no such thing pretty much in EVE Online. So very cool announcement, and a Tech 2 capital ship could have a very big impact on the Tech 2 ship market in EVE Online, I think, as well. So let's first take a quick look at the new Eden store, and then we'll start to take a look at the market. So we still have our starter packs front and center. Legacy bundles are up for grabs at around 1,000 plex, and no sales, nothing special in the services either. Alright, well, we are of course in the run-up towards that expansion, so I think a bit of a lull in both the sales action and also in some of the market action is to be expected. We've already been seeing that in pilot services, and they are coming in at 235. There we go. So let's get started as always with plex, and you may already have seen that from the ticker as well, but we are basically moving sideways in the plex market, just shy of 4.5 million in the chart. And if we go to the sales here, 4.7 million for the sellers, and then for the buyers at around almost 4.5 million. That's actually pretty interesting to then see your averages be just below 4.5. That means that at the moment there's actually lots of people selling plex into the buyers market, more than there are people grabbing plex from the sellers. And that's apparently how we are getting at the moment, at least, this wait and see pattern. The sellers are not being these prices are not being forced up towards or above 4.7 million. That would eventually force the buyers up. No, there's plenty of supply still coming in, which is not that unexpected considering the sale that just happened, that happened a couple of weeks ago. Then we have of course the multiple pirate trading certificate. That one is I removed that from the list last week because it's become a legacy item, and that chart really became like a daily averages all over the place. Very hard to still get a nice story out of that one. So we're moving straight on to the skill extractor. That has gone up a little bit over the last week, but also stabilized at the tail end, and is clearly not at the highest price point of the year. Currently selling for 510, 517, almost 520 for most though, so we gotta be a little bit careful here. And then 486 million for the buyer. Still a little bit of a spread opening up here as well. And while the averages are well above the 500 billion, so this is definitely still a seller's market as well, there's clearly a little bit of hesitation. Buyers are not willing to keep going up. So you can see here these minimum prices already starting to make their way down. This is basically trying to anchor things as well. Could be interesting if, just like with plex, eventually skill extractor market gets into a buyer's market. don't think that's gonna be the case all that easily for this item. It's just too expensive and there's not enough of them, I think, available to make that happen. But clearly we are again starting to hesitate a little bit. And then we get the impact on the injectors. That's always interesting with the large scale injectors feeling a little bit of pressure, but really if you look at the minimum prices and the maximum prices, we're basically very stable for the week, just shy of 950 million. Again, 950 for the sellers and 910 million for the buyers. 40 million in spread here, really not a lot, but again, buyers not really willing to be pushed higher, and this is really anchoring everything down. I think players are basically waiting to see what happens next, which is kind of interesting. We got that dread announcement. You could expect a small rush towards some skill injectors for some players that just basically want to be in there day one as soon as possible. They might need some skills, of course. I think the Lance will have at least its own skill tree, but at this point, of course, as well, 20 years just passed. My character, for instance, does have a lot of extra SP ready to pop in there to put into any skill that I want, so I think most players actually might just be prepared. The small skill injectors doing the exact same thing, basically stabilizing the last couple of weeks at a range just above 190 million, 193 to 180 million. That's a 13 million. Starts to open up a little bit here again, 177 for the next one. That definitely starts to open up a little bit of spread, getting closer and closer to a 10%. So still doing its own thing in one aspect of the market, but in general now we are seeing pretty stable, I think, pilot services that are basically waiting to see exactly what the expansion means. At first it was the graphical update, which, well, is that an expansion? Not exactly. Getting Take-Two Dreads, honestly, I think that pushes it straight into, yeah, this is not a small change, it's actually a pretty damn big change. If they can then just add a little bit of story and things like that towards those Take-Two Dreads, I do think we have something worthy of an expansion. So pretty interesting choice, but so far the market is basically still waiting and seeing, and this to me is very interesting, very unexpected as well. As we touched 50 million, we have the daily alpha injectors actually hesitating as well, starting to feel a little bit of pressure. Volumes coming down here too. We are talking just shy of 50 million for the sellers and 46 million for the buyers. That's actually a reasonable spread percentage wise as well, and overall I think here same story. Even the alpha players are like, let's see what comes next, and perhaps even this small pullback in the daily alpha injectors is a sign that the market for the daily alpha injectors at least is a little bit disappointed with Tech2 Dreads, right? That's not something that an alpha player is going to shoot for, and that's not content that they can immediately interact with. Well, maybe they can take part in those really big battles for EVE Online, but that's not for everyone either. So interesting move here in the daily alpha injectors. I personally thought we would just go straight through the 50 million and break that without too much trouble, but that is not the case. Next up we have the minerals coming in at 810. There we go, and we start with titanium, and you can see not really on the chart, but from the ticker you may already have seen that what was slightly expected definitely happened. We got a sale price above 4 ISK again for titanium last week, and as a result supply came in to take advantage of even that small bit of an advantage above 4 ISK, just crashing the price right down for the sellers back to 4 ISK. So they're like a little bit desperate. I can get above 4, sell, get to 4, and then they're actually holding off. And buyers are so far interested enough, there is enough demand to keep us very close to that 4 ISK at 389 as well. So overall I think we'll keep bouncing into that 4 ISK. From time to time we may even have some sellers dip just below that, but everyone else probably gonna hold off at that point. And so this really seems to be the range for titanium at the moment, but anytime a big purchase happens pushing the price up above 4 ISK, there's plenty of people with titanium waiting to sell at those prices as well, and so we have a very quick response back down. For pyrite, a little bit of a different story. You can see here second week that we have been going up, heading towards 11 ISK, definitely away from that 10 ISK mark on the pyrite market. 11.14 for the sellers. Look at that, 10.90 for the buyers, definitely showing quite strong demand here in the pyrite pyrite market, buyers forced up, feeling like they're forced up towards that 11 ISK as well. So we might start to consider, or at least do the calculations, what is 4 ISK for titanium, what does 11 ISK mean for pyrite, and should we switch our priorities a little bit? I think it's perhaps a little bit early to do that, but if Mexalon can start to do the same thing, perhaps that will give titanium a little bit of more breathing room to get back above 4 ISK and stay there. And look at that, very different move here as well over the week for Mexalon, perhaps on the announcement of the new dreads, because I do think Mexalon is a little bit of a bottleneck potentially in nullsec production chains, and as a result we have 53.10, still not a stellar price though for Mexalon. 52 ISK for the buyers though, very narrow spread, showing that there is demand at least for cheap minerals at this point, and a little bit of upward pressure for the week, except in titanium. So very interesting to see how things will evolve in the next few weeks, especially as we get more information about what it's actually gonna take to make those new dreadnoughts, get that on the test server. I think that will have an impact on the market as well. So first tiny little wave I think here potentially related to the dreadnought announcement is an uptick in the more expensive high-sec minerals. Next up is low sec. So here is the Isogen chart that touched 625 and actually started a nice upwards movement, a full breakout up until a couple of days ago when someone came in, sold into double the daily averages, and as a result we are back at the 600 ISK range. So 608 for the sellers, 570 for the buyers, and this is another story that I think from time to time we will see, but very interesting to see that Isogen was just about to break out 1 year high point, and then a seller came in and said, I'm gonna take advantage of this price. So there's not as much confidence in the market anymore that we're gonna continue to ride this wave towards 700, 800 ISK or anything like that. We're getting into that more regular market action where extra demand can push the price back up, and then supply can bring that price back down in a pretty sharp way here all of a sudden. So very, very interesting move. You can see how, whoa, what's happening, sell, bring in that Isogen that has been holding on the sideline, but only bring it back down to a 600 ISK. So very carefully here, a small jump up in price that has been snuffed out by some volumes. Very cool to see. Noxium should not have that many reserves, and look at that, just like with Mexalon, we got a jump up in price above 1000 ISK as well. Some supply came in, but you can see that it's not as much as what is still possible in the Isogen market, and so we basically flatten out just shy of 1000 ISK on average. 980 for the sellers, 935 for the buyers. This is a sign that while it's they are indeed getting exhausted, because they can't just like completely pin the price down for months on end with billions of units of Isogen, and you can see that here as well. We get the 16 million that's coming in here, but everything else, oh, actually there's a 2 billion sell order at 614. That's probably what caused the increased price to stop here. I'm not sure why you would put up 2 billion units. That's just gonna keep us here for quite a while, but that's what happened. So obviously someone still had a couple billion units of Isogen and decided to dump him here at 614, and so now for the foreseeable future, actually looking at that, we're gonna be bumping into that quite a few more times before we chew through that 2 billion units, but Noxium doesn't have those reserves anymore, and so this one settles at a new higher range all of a sudden. Very, very interesting dynamic, and showing that, yeah, there are still players out there holding huge amounts of Isogen, coming in at 2 billion in a single sell order. Crazy stuff to do that. And then everything else though, got a couple of 180 millions at 650 and 1200, so those are like speculative sell orders, but probably that player has been unloading in smaller chunks along the way and has already made quite a bit of profit. That 2 billion there, it's going to be interesting to see how that impacts the Isogen market. Next up is nullsec. Here is Zydrine, basically flat for the week, pretty average on the full 1 year chart, and actually at 2400 ISK for the sellers, 2340, so very, very narrow spread here again. This actually seems like a pretty reasonable price, because if we compare it to Megasite, that is hovering at the 1 year high range, 3570 to 3440 to 3,400. Pretty narrow spread here, a little bit more because it's that much more expensive, and has clearly regained its title as most expensive Tech 1 mineral. Very, very expensive megasite. Also doing a little bit of a number here on the volumes. Struggling to really have any breakouts, but overall, yeah, Nullsec is actually, I think, very happy with these prices. Even these hydrine prices, I think, if we look at where we come from a year ago, we're clearly in a different market dynamic, and both of them actually holding on quite well to their current prices. So that to me is also showing that there is quite a bit of demand actually for minerals at the moment. And then finally we've got Morphite that is continuing its slow descent. You can see that 20-day moving average is continuing to go back down. We're crossing that right at the tail end, but I think the spread, you can see that here on min-max prices, is staying quite high. So we're talking 39,450 for the sellers, below 38,000 at 37,870 for the buyers. Definitely a bit of pressure in the Morphite market that could turn around, considering that there is of course a Tech 2 dreadnought that's coming. Next up, the PI market, 1555. This one could be very interesting. We're seeing a little bit of extra demand in the high-sec minerals. So if all of that is due to, well, we might even need more Tech 1 dreads, because then we need to turn those into Tech 2 dreads. That is, of course, potentially going to mean very good times if you're looking for high prices in PI. Let's get started. Here are the broadcast nodes holding on to 2.5 million, I think, for the sellers. One seller at 2.4, but most very close to 2.5 million, 2.2 million for the buyers. Actually a bit of spread here between sellers and buyers that has opened up, but the sell price is still dictating everything and very expensive. And construction blocks, the first one to confirm that yes, we are still building to higher prices, going up above 12,500 disc, 14,200 for construction blocks, 12,400 for the first buyer, 1 year high point, extremely expensive PI materials. Next is coolants, basically matching its 1 year high point from just a couple of weeks ago. So even a price at 15,000 disc can only momentarily bring in more supply to bring the price back down. And then even with these low volumes, everyone is just desperate enough to pay 16,000 discs for the sellers, 15,000 discs for the buyers. Even at these crazy high prices, the spread is not opening up all that much anymore. Buyers are basically forced to go towards 15,000 as well. Crazy times actually here as well. Enriched uranium managed to get close to 20,000 discs, so that's of course a very pronounced 1 year high point, and doing a double step down, quite interesting. But if we go and look at the price, of course, almost 17,000 discs for a refined PI material, 16,260 for those buyers. That's a sign of desperation yet again. Volumes are starting to take a dump here too. So all of this again, I think is starting to point towards potentially a bit of a bottleneck problem when it comes to capital production and PI. But we will see. So far, anyone that's making PI, of course, is very, very happy with the prices they are getting. And another, I think, confirmation that the Tech 2 Dreadnought announcement has not done any favors for those that are looking for cheaper PI materials. Integrity response drones, you can see just a couple of days ago, volume shooting up again despite plateauing well above the 3 million, super expensive, and breaking out to 3.65 million for the sellers, 3.3 million for the buyers. I think another push up due to we need even more capital ships now. Mechanical parts is staying in its new range as well, 12.5 to 15,000, for almost 14k for the sellers, above 13 for the buyers. Very expensive. Miniature electronics, it's also refined PI material. Let's not make that mistake, as it went up to almost 22,000 disc. It's at almost 19k for the sellers and 17 for the buyers. I mean, the story, I think, at this point we know what to expect. Nano factories, also a couple days ago, a volume jump and then a small bump in the price. It's still holding on quite nicely, but there is really no sign of exhaustion or anything like that here, except in the volumes sometimes. 1.4 million to 1.2 million. You can see that the volumes are clearly struggling with these high prices, but there's just enough demand, enough desperation out there that they're able to maintain them. Organic motor applicators staying above 1.25 million. 1.35 almost for those sellers. Recursive computing module, well, still very high volumes, and then you can see how we are in a completely crazy range at 2.5 million as well. This of course has that extra need, I think it was like ship costs and things like that, so that's super expensive. Robotics very easily staying around the 110,000 mark, 113 for the sellers, 110 pretty much for the buyers as well. Very narrow spread here in specialized PI material, and on this 1 year chart, I think, right, if you have this, if you're holding this, or if you're producing robotics, you are just very happy. Rocket fuel next, just bumped into the 15k again, and some supplies are giving us a little bit of a breather, but it's still 14,000 disc. And then here, when you get that little bit of a breather, here are the buyers, right? They're desperate. They're also pushing into 14k. So this can basically go down a little bit more, but then it's poised to shoot back towards 15k, I think, for the sellers. Self-harmonizing power cores, first one that is really slightly breaking the trend, getting back below 2.5 million here, 2.4 for the sellers. But again, it's probably a little bit of extra supply that has found its way to the market. As the buyers are desperate, they're just clinging straight into that 2.4 million as well. So super narrow spread on this pullback this week, and we'll see what it does next week. Smart fab units had a crazy, probably speculative jump to 180,000 disc. Oh, and of course this one also has that irregular volume problem. That means that it goes to lower price points, but its volatility is far higher, and this again is shown, I think, with those daily average. So here we get 180k, and then on a couple of days the average price was straight into the buyers at 60,000 disc. That's a third of the price, and then you can see at the moment we're building back up on volumes, going crazy, and we're back at 110,000 to the sellers and still 70,000 to the buyers. So huge spread, and on a day-to-day basis, this can really make a very big difference. So if just about 10 days ago you bought smart fab units at 60,000 disc, and that was actually the average price for the day on 2 occasions, so that was definitely possible, then now you're already looking at a nice 50% profit. Or close to 100% profit actually on the sell price. Sterile conduits next, pretty flat here, 1.4 million almost, but again super narrow spread here as well. Buyers above 1.3. We've got our supercomputers that are staying just shy of 150 on average, 154 to 133, bit more spread on this one. And then our synthetic oil staying well above 10k, 11,500, 11,000 for the buyers as well. Synthetic synapses, 150,000, so definitely expensive. Transcranial microcontrollers flat at the highest price range. Even water-cooled CPU is building 1 year high point just a couple days ago, 12.5. Complete exhaustion of supplies here, 13,500 almost for the second. 12.5. 13,350, 14.5, 15,000 discs. So you know what's potentially coming in for water-cooled CPU. Now these prices will probably bring in some supply. Some people will have a little bit of water-cooled CPU that they've been holding on to, as it was majorly oversupplied at the start of the year. But this is definitely showing it's just PI is needed in huge amounts at the moment, way more than I think what is being produced. Then we get wetware mainframes staying well above 2.5 million as well, 2.75 for the sellers. Bit of spread here too, but again that new range is just there and is super expensive. So PI showing, I think, that a lot of manufacturing is still happening towards those larger capital ships, and as a result, desperation to get PI is still definitely here, with some more one-year high points this week, which has been basically the trend for the last couple of months. Then we've got our advanced moon materials, 2415. Here we had a far more stable picture and definitely a more diverse picture as well when it comes to what prices are doing. So let's get started as always with the carbides, and we need to start with Galente crystalline carbonite. Did jump up to 175, some supplies are coming in, but nothing is crashing the price back down, so we're staying quite expensive, 166 ISK to 156 for the buyers. Quite expensive, but nothing all too drastic here in the price move. Then Caldari is next with titanium carbide, was also climbing up to a higher price point. A little bit of supply coming in here as well, 165 to 157, basically same price range as the Galente version. Then for Amar, it's tungsten carbide that is flat for the last couple of weeks at the highest price point of these so far, 187 to 180 ISK, but also decently stable. And then for Minmatar with Fernite carbide, we finally have a slight move up, but clearly still lagging behind in price range, 125 to 117. So basically same story as the last couple of weeks. We've got Amar that's been doing really well, and then Caldari and Galente sometimes getting pretty close to each other, with Caldari definitely having the edge and being a little bit more expensive from time to time. Then in the metamaterials market, Galente is photonic metamaterials, also stabilizing and plateauing at a pretty expensive price, 12,000 ISK for the sellers and the buyers, very narrow spread here. For Caldari, it's non-linear metamaterials, staying above 15,000 ISK, so here is that edge, almost 16k in fact for the sellers, but a bit more spread here. And then for Amar, it's terahertz metamaterials that is doing really well and actually getting to the highest sell price at 18,000 ISK, with buyers following up above 17k. And then probably lagging behind the most, it's Minmatar with plasmonic metamaterials. That's also going up this week though, but look at that range, 13.4 to 11,670. Definitely hesitation here to push prices for plasmonic metamaterials up in that market, and clearly the one lagging behind the most, with here Amar number 1, Caldari 2, and then Galente number 3, which is basically the order that we've seen most of the last couple of weeks. In the other advanced moon materials, I'm still basically expecting a little bit more stabilization in some that have made moves in the last couple of weeks. Fermionic condensates, that's pretty much a flat chart, not much to say here. Ferrogel, ooh, that's definitely interesting, did reach a one-year high point apparently early this week, and then is starting to come back down, but I wouldn't say call this a stable market. Definitely finding new highs and new ranges above 30k at this point basically, so that's quite impressive. Then we get Fullerides, that's pretty stable around 700. Hypersynaptic fibers also stabilizing at the highest range, which it had already reached here in February, just shy of 7,000, so nothing too drastic here. Nano transistors had this one price spike early May up to 5k, but really 3,000 ISK is its new range. Phenolic composites starting to hover above 1250, but you can see we are stabilizing at this higher range as well. Pressurized oxidizers, this one was definitely interesting, one of those newer materials that on the one hand when the nerf to the output from moons came in, shot up to 12.5 to 15,000 ISK. This was its new range. Managed to stay there for a couple of months. Eventually we broke back down, but we are basically back, right? We're back at 13.6 to 11,400 ISK. We're back above 12,500 for the average price. And then reinforced carbon fiber doing the exact opposite, managed to climb above 12.5 and basically stay there for 5 months straight, but now at the tail end this seems to be a little bit more substantial, down to 11.5 for the sellers, 11,260 for the buyers. So we're not going to crash down to 7,500 or anything like that, but clearly sometimes a bit of extra supply is starting to bring those prices back down of those newer items as well. And then we've got ceramic fibers, bit of a spike early May again, but stable below 400 ISK. So advanced moon materials, I think those should be a stabilizing effect on the Tech 2 ship market. So let's dive straight into that one as well at 29 minutes. And there we go. Let's get started and see if we get surprised. The surprise could be, of course, that players are going a little bit crazy with potentially a Tech 2 Dreadnought coming. Well, actually, with a confirmed Tech 2 Dreadnought coming, I should say. For the Basilisk, well, we were already trending up last week as well. We were starting to basically turn the corner as we went below 140 million for the buy prices, and the average prices got very close to that. Didn't quite make it, but got very close to that in a couple of days, and now we are back towards the higher end of the range, but no full breakout yet. 172 to 150. Unless we get back above 180, I'm still calling this a stable market. Next, we've got the Cerberus. That's definitely a stable market, a little bit above 150, almost 170 for the sellers, 153 for the buyers. But this is a narrow spread, this is not going anywhere, and even a volume spike here hardly moves the price. Next, we've got the Curse. That has also definitely found its new range and is back actually at the higher end of this range now, 190 to 172. But again, you can still see that those maximum prices seem to be going back down. So this is actually very, very stable. The Damnation up a little bit for the week as well, but nothing too drastic. You'd think perhaps that command ships, being some of the larger Tech 2 ships at the moment, would struggle even more when it comes to grabbing enough materials, but so far the market doesn't seem to be all that worried, although up until this point, up until the Deacon, all ships were up a little bit for the week. There's no sign of panic or anything like that. The Deacon continuing to just land on 20 million, and buyers are opening up a bit of a gap at 17,000. So is this a buy opportunity? Well, you can see the volumes for the Deacon are not great, so I wouldn't risk it. The Eagle basically matched 180, starting to come back down towards 150. Sellers 158, buyers actually 130. Definitely a bit of spread here, not that much interest. This could have, if this enough supply comes in and brings us down and buyers start to trigger below 130, there could be a jumping point here for the Eagle, but again, volume warning. Then we've got the EOS up for the week, but still very shy of all the previous spikes, staying below 350. So nothing too drastic to report here. The Ares flat above 50 million. Yeah, that's quite stable. Flycatcher up a little bit for the week, but again, just above 50 million. That's not really a profitable price spike. The Guardian, that's not bad, jumping right back up to 180 million, 178 to 162. Volume wise, nothing all too special, so it basically became a little bit too cheap below 150. Buyers got to a 140. That's interesting. That's clearly a trigger point here, right? You got the opportunity to buy some Guardians below 140, and then we shot up straight to 180. That's actually a tradable spike here. So logistics cruisers are still, at least the Guardian is showing a little bit of action. Also very interesting, of course, it's in the same period or just after where the advanced moon materials for Mars ships also showed them being the most expensive. So here, that's a nice little move here. That was definitely something that could have been a nice trade on a very short time frame. Next year we got the Heretic, slowly back above 50. Honestly, there's not much to say. We got the Hound, slightly up for the week. But overall just flat around the 20 million. Ikitursa also went up, but nothing too special, just above 150 million. The Ishtar, yeah, it's actually pretty expensive, but overall 185 to 170 million. There's not that much to say on the Ishtar either. It's expensive. You can sell if you still have some cheap ones out there, but otherwise very difficult to trade here. Kirin up for the week here as well, above 20 million, but not a trade worry. Price spike. Manticore, even buyers starting to dip below 20 million. That doesn't last long, but overall, again, this is very stable chart. Nemesis, same story, up for the week. Buyers forced up a little bit, but just above 20. That's not really worth too much. Nighthawk, despite very nice volumes at the tail end, basically flat for the week here as well. Olneros, so another logistics cruiser, pretty good. Look at that trigger point, buying below 130 million, and now we are selling again at almost 160. Yeah, so not great, but at least we went above the previous spike, so that's pretty good. Perhaps for some reason the market wants tick 2 ships. Well, actually no, the volumes aren't really showing signs that this is tied to the tick 2 dreadnought or anything like that. Purifier up to 25 million, but again, if you look at the previous spikes, this is not really all that much. The Rook 150 to 170, something like that. 165 to 156. Then we get the Saber flat above 40, not much to say. Here is the scalpel chart landing on a bit above 10 million for the buyers, and then the sellers managing to get 13 million. There's a bit of spread in here from time to time, but honestly, Scimitar very flat below 150. Sleipnir managing to get to a 350, so a little bit better than at the start of the month, but yeah, you got a trade here, 250, but how often will we see the Sleipnir back at 250 million? Not often, I don't think, especially now. It's a command ship, so takes a lot of materials. So does it take to Dreadnought? Probably. So yeah, very flat Vagabond, and then finally the Zarmast starting to stabilize here as well. So unfortunately, if you're looking for actively trading the Take-Two ship market, except for at this point armor, I think it is, logistics cruisers don't really have a lot for you, but yeah, logistics cruisers in general do have a slightly more wavy pattern and can be traded actively. The rest of them definitely pretty disappointing. It is possible. So if you want to be prepared, if you want to try to buy those low points, to me that does make sense if you're expecting a bit of a rush for Tech2 stuff to happen when the actual costs comes onto the test server. And it is straight just an upgrade in volumes from what it takes to make sub-capital Tech2 ships. Then it's like, you could have a good time there with a trade like that, but it's pretty risky, of course, because it is possible, and CSB has already shown this, that CSB is going to put in some extra levers so that they can influence just that ship market without touching the rest of the Take-Two ship market. That's absolutely possible, so that's something to keep in mind. They have in fact shown that they have those levers, and that they have, for instance, made it easier to make dreadnoughts rather than carriers, and that's another sign that actually they might just have a long-term plan as well, because cheaper dreadnoughts and then you come out with Tech-2 dreadnoughts, that makes a lot of sense. Next up, the Tech-3 ship market at 36.55. So as always, here we start with the destroyers, and very interesting comment that was posted on last week's EVE Talk. The price spike here across the board in all of these tactical destroyers apparently was tied to some wormhole salvage, sleeper salvage, that jumped up. Now, I do personally feel like this is a huge response then, so this is a very interesting precedent that is potentially set here. Sleeper salvage shooting up, and then that's actually crazy range, right? 60 million, that was already quite high, and just here in April you could have bought below 50 million, then you jump up to 90 million ISK, 30% increase, very, very high, and actually stayed there for about a week. Now we are stabilizing and coming back down, and we're back at 58 million for the sellers, still 56 million for the buyers, so it's not the time to jump in yet on the buyers here, but that's an interesting correlation, definitely something that we should keep in mind for potentially perhaps adding this one to the extra product from time to time. That sleeper salvage, not gonna be this week, I don't have that much time today, but it's interesting, very nice explanation, makes a hell of a lot of sense to me, although I do feel like it's a very violent swing due to a single part of its production cycle. So here we're gonna have to see if that is something that we could take advantage of in the future. Then we get the Heckgate, and that's the strange part here, still actually at that high point, 75 million for the sellers, 68 million for the buyers. Super expensive and definitely responding differently than the Confessor. Next up here we've got the Jackdaw. That one has stabilized as well, but had that early spike up to 80 million ISK, and as a result we're at 56 to 53. So again, pretty narrow spread here, but perhaps looking into buying below 50 or something like that could be worth it. And then we've got the Fable that is basically flat at its higher price range as well. 74 million for the sellers, 64 for the buyers. Bit of spread opening up here, but even that one is still coming down here. So whatever happened, if it is indeed just that correlation between sleeper salvage and then the tactical destroyers, it's definitely not like uniform how the ships react to them, which is also full of opportunity. I mean, that means that you just had a sell opportunity in the Confessor almost a month ago, but you're still looking really nice on both the Hecate. Oh, and then the Jackdaw actually was like super early. So very interesting to see if perhaps some ships have a stronger correlation to that, or still part of the meta and thus respond first, and then you might just find some nice predictable patterns in this. It's interesting, and I'm definitely gonna try to take a closer look at that and see if there's no way to actually trade the tactical destroyer, because it would be very nice, of course, if we can take advantage of these kinds of price spikes. They are definitely crazy high percentage wise. Next up here is the cruisers. So the Legion, that is definitely a bit unfortunate as well. We tried to go back down a little bit at the start of the week, but very quickly back above 190 for the buyers, and we're not reaching the 180 anymore. So this clearly has found a new range as well that is less volatile, just like most of the Take-Two ships, unfortunately. 200 million, 188 for the buyers, but again, this shows that it's harder and harder to actually grab a ship from those buy orders. Next here is the Loki, back above 210, definitely all over the place with the min-max prices, 216 to 200 million. So what this means is that on quite a few days, the only ones that are seeing action are the sellers. So the only way to trade hands on a Loki is to buy it from a seller at 216 million. That's when you get these types of daily averages with nothing below them. And then on a very rare occasion over the last couple of months, someone actually sold a Loki to one of these buy orders. Definitely something to take note of here, as that means that buying a cheap Loki is not easy, but whenever we would start to see something like this, right, buy prices coming down a couple days after each other, that's when you have a good chance to actually grab one. That's definitely something that could be interesting. Next here is the Proteus. You can see here that's a little bit more balanced when it comes to sellers and buyers seeing some action. Did make its way up here quite nicely to 230 million, starting to come down, but I think we know the explanation for that. That's very likely to be tied to events. And then we've got the Tengu that is still hovering, or was hovering at the start of the week at the high point above 250 million, and is starting to come down from that as well. 242 for the sellers, 228 for the buyers. Look at those volumes, very clearly event related. So another part that we have to keep in mind here for these Tech 3 cruisers, then I think especially they are some of the most powerful PvE platforms that you can build, specialize them for these events, and that's exactly what happened right here for the Tengu in the last month or so. That's also a trade that we can keep in mind. Perhaps next time with the right resistances, could be Loki, could be Legion, and so trying to snag some of the cheaper ones does make a lot of sense. And then for the extra product this week, as I mentioned, don't have that much time, so we're just gonna take a look at the Gecko to see what one of those. Ooh, that's interesting though. Did not expect it, but I'm gonna have to put in 42.45. Forgot to write that down. But yeah, the Gecko, as most of you guys probably know, is one of those limited items that cannot just be farmed by playing the game, but we are dependent on CCP coming out with making the Gecko a bit of a reward. And a very, very sharp jump in the second half of this month from well below 130 million, so probably 110, even something like that, 110, 120. And currently geckos are going for 150 million to 140 million. Now it could also be with the event. Was the Gecko a good choice for a drone or something like that? Might also explain that later increase in price in the what the hell, me and names in the Proteus. But this is a very, very sharp increase in price to 150. Now, I'm actually gonna have to put this on the list again maybe a couple of weeks from here, because it's gonna be interesting to see if this one can start to move sideways or even slightly up, as well, you don't just make more geckos in EVE Online, or will we actually see a bit of a bounce as speculators, like potentially myself. I actually am holding quite a few geckos. I look at them as being slightly like gold bars in EVE Online, but this is a very nice increase in price. I think I bought mine below 100 million, couple at 110 or something like that, and as a result here, that's a very nice profit. Unloading some of them might be nice if later down the line, and eventually that will come, of course, you can load up on them cheaply, because CCP makes them part of the reward structure. That did not happen apparently over the 20 years of EVE Online. Perhaps players were speculating on that. You can clearly see that the inflationary cycle of the gecko went up until the mid-March at 130. And normally, right, if we would not expect CCP to ever come out with geckos again, this would just keep going up and up and up. But you can see that here, as we approach the 20 years of EVE Online, perhaps there was this speculation that maybe CCP is gonna make this the reward structure, so let's start selling up until a 125. There was enough players that were like, yeah, we're hesitating, but then they did not come out with geckos, and as a result here now a 150, perhaps even with the event geckos being really good in that or something like that. Crazy price boost here all of a sudden. But if you would look at this on a full 1 year chart, then that does make sense for something that cannot be produced just by playing the game. So very, very interesting. I would not be surprised if quite a few sellers come out of this all of a sudden and do bring the price back down. But normally, if we don't expect CCP to bring out geckos anytime soon, then this might actually start to go back up from here as well, which would be one of those unique items and unique charts that can also be very advantageous for trading. But for me, for the gecko, is especially having that inflation hedge with a little bit of timing, right? It's not too much work to take a look at it and to see, oh, geckos are rewards, so maybe we can actually grab more gold. That's basically how I tend to play that this market, but very surprised to see this super sharp increase to 150 all of a sudden. So if you have other explanations, I mean, it's not volume related, so let me know in the comments. But perhaps players realize that, yeah, 20 years of EVE Online, no new geckos. That was counter to the market, very profitable for those that actually held on to their geckos. And that's going to be it for this week, guys. Thank you very much for watching, and as always, I'll see you next time.